As of December 31st, 2023, SA's top 10 quant picks didn't just play the game. They aced it, outperforming the S&P 500 by a whopping approximately 42.5%. That's not a small feat. The star players, brace yourself, stocks like SMCI shot up by a jaw-dropping 242%, MOD wasn't too far behind with plus 196%, MNSO clocked in at plus 85%, and PDD played a solid game with plus 71%. So, what's the secret sauce? SA's quant strategy is like a stock wizard. It spots the champs based on growth, value, profitability, earnings revisions, and momentum. It's not just about finding good stocks, it's about finding the MVPs in the stock game. Now let's talk 2024. The word on the financial street is that inflation might cool off and economic demand could ease up a bit. But hey, don't let the conflicting predictions stress you out. With a solid investment strategy, there are still opportunities to grab. Enter SA Quant Rating System. This superhero of analytics is backed by a model that didn't just beat the S&P 500, it left it in the dust in 2023. Imagine having that kind of wizardry on your side. Now, rewind to the start of 2023. The crystal ball gazers were all about predicting a recession and a struggle for equity markets, while bonds took a victory lap. Choosing the right stocks in such a scenario isn't a walk in the park. Our top picks faced a bit of turbulence, sure, but guess what? As the year rolled on and investors got a taste for stocks with solid foundations, these picks became the champions of the game. So if you're gearing up for 2024 and want to be on the winning side, consider the stock playbook that turned 2023 into a victory lap. The game plan is already proven. Let the stocks do the talking.
Big shout out to Seeking Alpha for sponsoring our video and its analytics. Make sure to get your 14-day free trial of Seeking Alpha. Premium via the link in the description. You can only get the 14-day trial through the link below, so make sure to check them out, guys.
Investors are eyeing inflation and economic demand, thinking they might take a breather and, maybe trigger some recession alarms. Now let's talk strategy. Picture this. A world where you're identifying stocks, not just randomly, but like a seasoned pro. Stocks with solid fundamentals, doing the hustle in areas like valuation, growth, profitability, momentum, and EPS revisions. Now, rewind to November 1st. The Fed, in its infinite wisdom, hinted at tapping the brakes on hiking, and bam! The market took off like it had wings. Major indexes were on a double-digit joyride. Now let's talk about the rock stars of 2023, the Magnificent Seven. These tech giants basically carried the S&P 500 on their shoulders. Picture this: high-end software, cloud wizardry, bouncing back from a MEH 2022 and surfing the AI wave. That's how these 7 megatech players owned the show. So what's the takeaway? 2024 might see a changing of the guard. Keep an eye out for who's stepping into the spotlight as the new market movers. Abercrombie & Fitch Company is showing serious game in the stock world. Forget the Magnificent Seven. We're diving into the consumer discretionary sector, and it's got some heavy hitters. Now, let's talk specifics. Here are some top quant-rated stocks that could be your ticket to the upside in 2024. 1. Abercrombie & Fitch Company, ANF. Market capitalization, $4.54 billion. This all-American retail champ pulled off a killer turnaround, rocking a plus 293% rally in the past year. ANF knows how to bring in the cash, with Q2 net sales hitting $935M, that's a 16% jump from last year, and Q3 net sales soaring to $1.06 billion, a solid 20% upswing. How did they do it? Digital transformation and embracing the online shopping vibe. ANF's Q3 EPS of $1.83 crushed expectations by 65 cents, and it's not just about sales. The margins are expanding too. But here's the kicker. Despite this stellar run, ANF is still trading at a discount. The forward PE ratio is a cool 15.87x, showing it's playing it smart in the pricing game. Plus, the trailing peg ratio is waving a minus 92.88% flag compared to the sector. Free cash flow on the rise, a robust balance sheet, and positive vibes for 2024 make Abercrombie & Fitch the heavyweight champion in its sector and industry. It's not just a stock, it's a quant-rated superstar. 2. Modine Manufacturing Company, MOD. Market capitalization, $3.17 billion. Quant rating, strong buy. Quant sector ranking, as of December 29, 23, 5 out of 533. Quant industry ranking, as of December 29, 23, 1 out of 35. Now let's talk about a company that's turning heads in the auto parts and HVAC game, Modine Manufacturing Company. With a market cap of $3.17 billion and a strong buy quant rating, MOD is making waves in its sector, ranking at an impressive 5 out of 533. But hold on, it gets better. In its industry, it's sitting pretty at the numero uno spot out of 35. MOD has a legacy that speaks volumes, especially in the auto parts and HVAC world. They're not just riding the wave, they're creating it by capitalizing on heating, ventilation, and air conditioning features like a pro. And guess what? They're not just about business, they're about sustainability too. MOD is riding the tech wave, improving energy efficiency, and making a mark in the sustainability game. Now let's talk EVs. While the electric vehicle buzz might have cooled down a bit, MOD is still reaping the benefits. With one of the largest markets in the US and Europe, MOD is in the game of providing commercial electric vehicle parts, refrigeration, and original equipment manufacturer OEM parts. And boy, is it paying off. MOD has clocked in a whopping plus 195% growth over the last year. 3. MI Homes, Incorporated, MHO. Market capitalization, $3.87 billion. Quant rating, strong buy. Quant sector ranking, as of December 29, 23, 4 out of 533. Quant industry ranking, as of December 29, 23, 1 out of 23. Now let's dive into the world of real estate, and one company that's not just navigating the twists and turns, but soaring high, MI Homes Inc., MHO. With a market cap of $3.87 billion and a strong buy quant rating, MHO is turning heads, securing the 4th position in its sector out of 533 and claiming the top spot in its industry out of 23. Now you might be thinking, real estate with all its volatility, why MHO? Well, that's the thing. Despite the rollercoaster ride many home builders are facing, MI Homes is not just holding its ground, it's thriving. Specializing in the construction and sale of single-family homes in the US, MHO has soared a staggering plus 198% over the last year, and it's not showing any signs of slowing down. It's even flirting with its 52-week high of $140.73. But wait, isn't it too high now, you might ask? Well, that's where it gets interesting. MHO might be trading near its peak, but its B+ valuation grade is telling a different story. Even after its impressive surge, MHO is still sitting at a discounted price. And with the current inventory shortages and the ever-growing demand for housing, snagging MHO at this level could be a smart move. 4. Giga Cloud Technology Inc., GCT. Market capitalization, $737.32 million. Quant rating, strong buy. Quant sector ranking, as of December 29, 23, 1 out of 533. Quant industry ranking, as of December 29, 23, 1 out of 6. Now let's talk tech and marketplaces, and one company that's blending technology with industry experience like a pro Giga Cloud Technology Inc., GCT. With a market cap of $737.32 million and a strong buy quant rating, GCT is not just at the top in its sector, 1 out of 533, but it's claiming the prime spot in its industry out of 6. GCT is not your average business-to-business market provider, it's a game changer. Connecting manufacturers primarily in Asia with resellers worldwide, GCT is making waves in the world of large parcels and global e-commerce. And when it comes to quality, GCT is hailed as one of the best stocks to buy now, with the highest return on capital. Now let's talk numbers, and boy, do they look good. In addition to the stellar quant ratings, both Wall Street and Seeking Alpha analysts are giving GCT a solid thumbs up. Q3 was a blockbuster for GCT, with adjusted EBITDA seeing a whopping 150% increase, marking the third consecutive quarter of record profitability. But that's not all. GCT is fueling its growth through strategic partnerships, acquisitions, and diversifying its product offerings. Financials? GCT is up 226% over the last year, and here's the exciting part, it's trading at an extreme discount, with a trailing PEG that's a 99% difference from the sector and a forward PE of 9.16x. 5. Dorian LPG Limited, LPG. Market capitalization, $1.80 billion. Quant rating, strong buy. Quant sector ranking, as of December 29, 23, 1 out of 234. Quant industry ranking, as of December 29, 23, 1 out of 55. Let's set sail into the energy sector, where Dorian LPG Limited, LPG, is making waves as one of the top-performing energy stocks of 2023. This company, along with its subsidiaries, owns and operates a fleet of 25 very large gas carriers, VLGCs, utilized for oil and gas storage and transportation. In a world filled with geopolitical tensions, Dorian stands tall with its modern fleet, technologically advanced vessels, and a keen focus on environmental regulations and energy transition. Even though it missed Q2 earnings, Dorian has analysts revising estimates upward. Why? Global seaborne volumes are on the rise, and Dorian had a robust quarter with record EBITDA, enabling the board to declare another $1 per share dividend. John Hadjipateras, Dorian's president and CEO, highlights the strength of their balance sheet, with a net debt to total capitalization of about 30%. This strength allowed them to return about $650 million to shareholders since their IPO. They've struck a balance between conservative fleet renewal, investments in operational efficiencies, and decarbonization initiatives. 6. Rolls-Royce Holdings, plc, OTCPK RICE. Market capitalization, $31.74 billion. Quant rating, strong buy. Quant sector ranking, as of December 29, 23, 6 out of 657. Quant industry ranking, as of December 29, 23, 1 out of 59. In times of uncertainty, defensive stocks shine, and Rolls-Royce Holdings plc, OTCCPK RICE, has been one of the stars. With a market cap of $31.74 billion and a strong buy quant rating, RICE is not just holding its ground, it's soaring. Formerly known for luxury cars, Rolls-Royce has diversified into industrial technology, operating in segments like civil aerospace, defense, power systems, and new markets. And here's where the magic happens. Rolls-Royce's fundamentals, coupled with a legacy dating back to 1884, make it thrive even in turbulent times. Defend your portfolio with Rolls-Royce in the new year. It's not just a defensive investment, it's a resilient force amid global turbulence. Despite the banking turmoil of 2023, financial sectors often thrive in times of increased rates and inflation. So let's talk about a top financial contender for 2024. 7. Intesa Sanpaolo SPA, OTCPK ISNP. Market capitalization, $53.34 billion. Quant rating, strong buy. Quant sector ranking, as of December 29, 23, 4 out of 695. Quant industry ranking, as of December 29, 23, 1 out of 67. Meet Intesa Sanpaolo, OTCPK ISNP, one of the major players in the Eurozone banking scene. Hailing from Italy, this financial giant offers a plethora of financial products and services across 6 segments, including wealth management and insurance. And guess what? It's on sale, marked by its A+ valuation grade. The PEG ratio alone is 85% less than the sector's average. Even with a touch of volatility, ISNPI's fundamentals are standing tall. It's carried its strong buy quant rating from most of 2023 into the new year, finishing the year with a plus 30% mark and robust momentum. The Q3 performance was so stellar that CEO Carlo Messina confidently declared during the earnings call, driven by client-centric approaches, service excellence, and a commitment to technological innovation, ISNPA is not just a bank, it's a powerhouse aiming for global prominence. Now I'm handing you a megatech and 2 under-the-radar tech stocks for a potential sector shift, all backed by strong buy quant ratings. 8. Meta Platforms, Inc., Meta. Market capitalization, $920.83 billion. Quant rating, strong buy. Quant sector ranking, as of December 29, 23, 1 out of 245. Quant industry ranking, as of December 29, 23, 1 out of 60. Enter the realm of Meta Platforms, Inc., Meta, a communication and innovation behemoth facilitating global connections. Focused on AI and virtual reality, Meta crafts products that redefine how people connect and share. With a whopping 194% surge over the last year, its user-centric approach, the monetization magic of Instagram and WhatsApp, and seamless e-commerce integration have been the secret sauce. And guess what? Meta keeps beating earnings like a drum. Q3 EPS of $4.39 topped estimates by 79 cents, and the $34.15 billion revenue outpaced last year's figures by plus 23%. While the stock sits at a premium with AD valuation grade, the forward PEG of 1.25x against the sector's 1.56x makes it a negative 19.90% deal. With a cash flow exceeding $66 billion, remarkable growth, and top-tier profitability grades, Meta is not just a social media giant. It's a tech powerhouse shaping the future with heavy investments in AI. So why not consider this innovator for your portfolio? 9. Celestica Inc., CLS. Market capitalization, $3.52 billion. Quant rating, strong buy. Quant sector ranking, as of December 29, 23, 4 out of 552. Quant industry ranking, as of December 29, 23, 1 out of 18. Ever heard of Celestica Inc., CLS? If not, you're about to discover a powerhouse in global supply chain solutions and electronic manufacturing services, EMS. This company, with a market cap of $3.52 billion, is a tech aficionado riding the AI wave. Now, what makes it shine? It's not just about the services, it's about the discount deal you're getting. CLS flaunts an A valuation grade, waving at you with a forward PE ratio of 15.66x, a significant dip from the sector's median of 29.33x. CLS, being a multinational electronics manufacturer with fingers in various tech pies, is crowned number one in its industry. It's not just a title, it's a recognition of its prowess in advanced technologies and supply chain optimization. Q3 earnings, a triumph. EPS of 65 cents breezed past expectations by 5 cents, and the revenue dance hit $2.04 billion, exceeding last year's tune by $52.78 million. Even though it's dancing close to its 52-week high, CLS doesn't just follow trends, it sets them. Supply chain flexibility, resilience, and a knack for riding industry trends while managing costs contribute to its bullish momentum. Ready for 2024? Consider adding CLS to your portfolio. 10. AppLovin Corporation, APP. Market capitalization, $13.69 billion. Quant rating, strong buy. Quant sector ranking, as of December 29, 23, 7 out of 552. Quant industry ranking, as of December 29, 23, 1 out of 191. Gamers, app developers, and mobile enthusiasts gather around. AppLovin Corporation, APP, is here to steal the spotlight with its captivating gaming portfolio and application software prowess. This $13.69 billion giant is all about elevating marketing experiences for developers and gamers alike. Why does it stand out? Well, it's not just about the games, it's the strategy. AppLovin crafts end-to-end software solutions using AI for marketing decisions. And here's the sweet spot: a forward PEG ratio of 0.64x, a jaw-dropping 70% less than the sector's average. APP has been on a journey of remarkable growth, riding high on its diverse portfolio, smart acquisitions, and a cash flow exceeding $880 million. Even though it's currently trading at a premium, that forward PEG ratio tells a different story, a story of a minus 70% discount compared to the sector. As we step into the unknown of 2024, opinions from analysts and economists are a mixed bag. The burning questions linger. Will the Fed persist with rate hikes? Is a recession looming on the horizon? How will equities navigate the uncharted waters of the new year? While history doesn't guarantee the future, our top 10 stocks for 2023, with a staggering 67% surge compared to the S&P 500's plus 24%, stands as a testament to the reliability of our quant ratings. Stocks with robust fundamentals tend to be the real winners over the long haul. The 2024 lineup of stocks I'm recommending not only presents the potential for double-digit gains, but has already showcased remarkable resilience in the face of 2023's challenges.